Can you hear me, Mr. Chairman?
We now hear you, yes.
Okay, thank you. Sorry about that. Thank you, Chairman Clyburn and Ranking Member Scalise, and I want to thank Chairman Powell for being here today. Last summer when the former Fed chairs, Bernanke and now Treasury Secretary Yellen, testified before this subcommittee, I expressed some concern that the excessive spending by Congress and money printing by the Fed might cause inflation. Mr. Bernanke denied this, saying that people said there'd be inflation in 2008, but they were wrong. Mr. Chairman, the numbers are in, and it looks like there's some inflation, at least the past couple of months, 4 and now 5%. When Congress spends trillions of dollars and the Fed prints money, something's got to give. Prosperity isn't created by government. I don't believe it's created by workers, by businesses, by entrepreneurs, creating and inventing, innovating. I founded a healthcare company, grew that company up to over $200 million in annual revenue in just 8 years, and I have a little bit of experience on understanding how to create jobs, grow a business, et cetera. And I genuinely believe those businesses out there are looking at this inflation as a tax. Now, it's a hidden tax, but they see it as a tax on their ability to B2B transactions with B2 customer. Every dollar the government spends has to come out of somebody's pocket, whether it's through another tax or a reduction in their purchasing power, it comes out. And if we don't get our fiscal house in order, I worry that inflation won't be transitory, as I know you've said both in the press and probably here today, and I apologize for being a little bit late. But my first question, Chairman Powell, are you concerned from an economic and really a national security perspective about Russia and China dumping the dollar and what appears to be a move to some kind of financial alliance between the two of them?
That's not something that's really within our bailiwick or on our radar screen. The dollar is the world's reserve currency. There really is no currency that's close to being able to compete. That's because of our democratic institutions and our record of maintaining low inflation, and because we have open capital markets and are great traders with the rest of the world. I don't see anything changing in that anytime soon.
Do you see the threat of raising the capital gains tax to 40% as a challenge to those capital markets?
Again, I really don't comment on tax and spending proposals. We don't have any authority over that. Whatever the level of capital gains tax is something that is the business of elected officials, not the business of the Fed.
I appreciate that. Over the past 10 years, the federal government's net interest costs have grown about 25% relative to GDP, despite the historically low interest rates. If spending remains on its current trajectory and interest rates reach their historic average of 5.7%, do you think the federal government will be able to pay its bills?
I have no question that the U.S. government will be able to pay its bills for the foreseeable future. There's no case in which that would not be the case. We have the strongest and largest and most flexible economy in the world. It's also true, though, that we're on an unsustainable path and that we're going to have to address that. And as I mentioned, the time to address that is when the economy is strong, unemployment is low, and economic activity is high.
Is it possible that the high interest rate that we're seeing today is the start of something that could be as bad as the 70s? And if not, could you explain why?
You say higher interest rates or higher inflation?
Inflation. I'm sorry. I missed it.
Very, very unlikely. What we're seeing now, we believe, is inflation in particular categories of goods and services that are being directly affected by this unique historical event that none of us has lived through before, called reopening the economy after closing it. So you see extremely strong demand for labor, for goods, for services, and you see the supply side caught a little bit flat-footed and trying to catch up. And you see bottlenecks and you see this all over the world, by the way. This is not just the United States. You see it everywhere, and it's very similar kinds of situations. And you have a central bank that's committed to price stability and has defined what price stability is and is strongly prepared to use its tools to keep us around 2% inflation. So all of those things suggest to me that an episode like what we saw in the 1970s, and I graduated from college in 1975. I had a front row seat. that nothing like that. I don't expect anything like that to happen.
Okay.
Shepard Smith here. Thanks for watching CNBC on YouTube.